Welcome back to the Investing House. My name is Brian, and I will be your host today. As you can see, we will be talking about the 5 best monthly dividend stocks for 2022. I'm talking about why I've been looking at them and at these particular stocks, why I want to get into them. Some of them I've been in before, and why I want to get back into them more in 2022. And some of them I already own, and I'm going to talk about why I'm going to continue to build my position in these stocks. Before we get into that, go ahead and use one of the links down below for either Robinhood or M1 Finance. Both you and I will get free money. If you use Robinhood, you'll get a free stock. If you use M1 Finance, you will get a free $50. I really like M1 Finance, but I also really like Robinhood. They're good for different types of strategies, and so I use both because I have a couple different strategies. Let's get into the 5 best monthly dividend stocks. And if you could, like the video right now, or you can do it in a minute because you're going to like it anyways. But I'm going to talk about why on earth would I invest in dividends? Why would I invest in monthly dividends? Should I reinvest my dividends or not? And then the best type of accounts to use for reinvesting dividends. I want to answer these right now before we move on. Why dividends? Because personally, this is my personal view on it, is that I like to see money coming in and truly see the compounding effect instead of letting just the stock do the compounding. I like to see true compounding where I get more stocks, more shares that will make it so that I can receive more and more shares eventually through dividends. Whereas a lot of people just let the stocks compound themselves with growth investing. I think that's great. I do that with my Roth IRA. But that's why I like to see dividends. Why monthly? Because that's purely just getting money working for you faster. There's a lot of studies that show that lump sum investing is the best way that you could invest in anything, and so that's why monthly instead of quarterly or annual dividends. You just get money working for you faster, reinvesting or not. At this point in my life, I'm 27, almost 28. I reinvest all of my dividends because I'm not trying to live off of them yet. My goal is to eventually, but not yet. So I do reinvest all of them. And then the best accounts, I would say Roth IRA is the best because you don't have to worry about taxes. But if you're limited there at $6,000, once you get that all maxed out, I'm personally working on my early retirement fund, which is is my Robinhood account. But best account would be a Roth IRA, and then you can pretty much use whatever account after that you want. Anywho, let's get into it. The very first, I'm going to start from the highest, most risky to the lowest yielding percentage. The very first stock is the Global X NASDAQ 100 covered call ETF, or QYLD. I'll leave a link up here in the corner and also down in the description to how I'm planning to use QYLD to retire in 6 years. So you can go ahead and watch that video. So it uses a covered call or buy right strategy, which if you don't know what covered calls are, I also have a video on that, which I'll leave down in the description. But they do that on that NASDAQ 100 index, and so it was listed in 2013. Their dividend is consistently between 10 and 12%, depending on the stock price. As of right now, they have a yield of 11.8%. I think that's very appealing for my strategy, which is in that video. But also, just in general, if you're if you're at the point of retirement, if you switched everything over into, I'm not saying to do that, I'm not a financial advisor, but if you switched all of your growth stocks over into a 11.8% yield, and you don't worry about your portfolio value, and then you just make 11% on your, say, $1 million a year, that's pretty good. We'll go on to the next one, which is the Global X S&P 500 covered call ETF, which is very similar to QYLD. It's just XYLD. and it uses the same strategy. It's a covered call or buy right strategy, but on the S&P 500 instead of the NASDAQ 100. It was listed in 2018, so it doesn't have a huge track record, but if you look into it over, let's see, since 2018, they're up 18%, but they've also been delivering great dividends. So I don't have any in this. I've got a lot in QYLD, but I am going to be getting more into this one this year as well. The dividend is consistently between 7 and 9%. Again, that depends on the stock price. And then the yield of about 8.5% today. So it's great stock for higher, consistent dividends. Now, obviously the price of your dividend will fluctuate, but it's usually between 7 to 9% of the stock price. And now we're getting a little bit more into more conservative, more consistent dividends that are a little bit lower, but again, we're not always chasing high yields. In Main Street Capital, their ticker is Main. They're a private equity firm, so they loan out money to smaller cap companies, and just to help them grow, to help them acquire other assets as well. So they've got a good vetting process and make sure that everything's fairly lower risk, but every investment has some sort of risk. They were listed in 2007, so they've shown a very good track record, and they're consistently growing their dividend. It's not a linear path, but it is consistently growing, as is the stock price. And as of today, December 22nd, the yield is 6%. So we can go over to Main. So you can see they're up 18% over the last 5 years. You get your COVID dip here. So it's pretty much fully recovered from pre-COVID to now. So that's good news. So they can continue to grow from here. I used to have a lot in Main Street Capital. I sold it out to be more of my own covered call strategy in Robinhood. So I used to have them. I'm going to get back into them this year. And then the next one is the Invesco S&P 500 High Dividend Low Volatility ETF, or SPHD is the ticker. So they track the S&P 500, but they compile the 50 lowest volatile and the highest dividend yielding stocks. That way they can make sure that your dividends will be consistent, but also you'll get some growth along with it. So it's listed in 2012. Again, just like Main, it's consistently growing, but it's not a linear growth as well. But it has continually grown since it was started. As of today, the yield is 3.71%. You can see over the last 5 years, they're up 12.5%. So it's not super good, but it's not bad because you're consistently getting your dividend. So that's, if that's what you're into, which I'm assuming you are because you're watching a dividend video, then that's good enough. And then the last one is STAG Industrial. I think this stock is great. Little transparency, I don't currently own it, but I did own quite a bit over the last year. Again, I did an overhaul on my Robinhood portfolio where I sold basically all of my dividend paying stocks, unfortunately. But that's just the way the game goes, and I'm getting more back into it this year. But the ticker symbol is STAG. It's a real estate investment trust where they do single tenant industrial properties. They lease out to companies like Amazon, Ford, FedEx, Costco, Shopify. They're fairly large in e-commerce, but Amazon is their largest percent of tenants, and it's like 3%. So they're not over leveraged in any specific area. They were listed in 2011. They've raised their dividend the last 7 years in a row, which is great for dividend growth investing. As of right now, they're at about 3.21%, which I think is very conservative, but also very good. I would love 3% every year. You can see over the last 5 years, they're up 95%, almost 100% in 5 years, that's fantastic. they're doing good. Just like all these other companies, out of all of them, STAG is doing the best growth-wise and dividend yield. And with that said, this is what I believe are the 5 best monthly dividend stocks for 2022. It's not a perfect list, and I'm not a financial advisor, so whatever you do with this information is completely up to you. If you've made it this far, please do like the video, subscribe to the channel, come back and watch all my awesome videos, and if you have any questions or comments, please leave them down below. Also, you can email me at brian@theinvestinghouse.com. I'll leave that link down below as well. Make sure to check out my other videos. If you would, I'm going to leave a link to my QYLD video that everyone seems to like, so you should probably like it too. And anyway, that's it for this video. Take care of yourselves until the next one. Bye.